In the midst of all this doom and gloom, tech investors say there are still good deals out there. Joining us now from San Jose, California is Kevin Landis, Chief Investment Officer of SciVest Group and President of First Hand Fund. He manages over $300 million in mostly tech investments. So, Kevin, first of all, I have to get your reaction on the S&P downgrade and the sell-off, especially in tech. How bad could this get?
Well, I guess your question is how bad can panic get? And that's more of a human nature question than it is a valuation question. Frankly, people are selling today what they can sell to raise whatever cash they can raise. And it reminds me of the Asian financial crisis and a few other panic sell-offs that we had, which in hindsight turned out to be pretty good opportunities for long-term investors to get good entry points on quality stocks. So how much worse can people panic? I don't know. Depends on how much leverage is out there.
That said, the panic, as you said, seems to be quite pervasive. Are you expecting more losses in the tech sector throughout the week?
Well, it's possible, but I think what's striking to me right now is that at least over the next few weeks, there's not really some great success that's rolling through technology that's going to cause you to hesitate, to cause you to want to hurry up and get back into tech stocks. It's easy to sit on the sidelines. I mean, we're very defensively positioned. We have a lot of cash, and we don't feel any great need to jump in. Now, if a stock like Facebook were public, that might be different. It might be, hey, you better hurry up and buy it because you'll never see this price again. But that's not going on right now.
So you say there are still good deals out there. Where do you see the opportunities
Sure.
and why?
Well, take a look at the trends that are working well in technology today. Things like smartphones and tablets, things like social networking and cloud computing. You can go take a look at the quality companies on those trends and ask yourself, well, if Qualcomm is the best positioned chip company on the smartphone trend, and that's a couple of 100 million units going to 1 billion plus units, wouldn't you love to own some Qualcomm? And do you think you'll ever get a better price than the market's giving you today amidst all this panic? That's a good example. Similarly, as more and more of commerce moves over to the e-commerce platform, this may be your best last opportunity to get a decent price on Amazon, no matter how expensive it seems at the time.
Now, aside from how stocks are performing, if, for example, tech companies need to borrow money, are those kinds of companies in trouble?
Well, I wouldn't say it's a great time to need to borrow money right now. Fortunately, most tech companies don't need to borrow money, so that's not a big issue. But in general, when tech companies are highly leveraged and are dependent on debt, it's tended to be a very troubling sign. So, not good in tech land.
And how could the wider panic, how could that impact consumer spending on tech equipment? Is that at all a concern?
Well, tech products tend to be new. And new products tend to be a bit more discretionary. So when the economy slows, it's the hot new product. Do you really need an iPad? If you could live without it a year ago, that's the way to look at it. And so if we slip into a double dip recession, sure, things like tablets and smartphones could take a bit of a breather. And that wouldn't be good for Apple. But I don't think it would take the shine off of that story.
Kevin, do you have any concerns about technology capital spending?
I think that we're in the midst of, I think somebody's called it the post-PC era. We're in the midst of shifting over from having basically a very robust client sitting on our desk to actually a very thin client sort of sitting in our pocket. And that's I hate to use the buzzword, but that's a different paradigm, which means tech spending that has to do with the classic client-server PC architecture, that's at risk. And those are not names that you'll hear us pounding the table on.
All right. Thanks so much. Kevin Landis from First Hand Funds and the SciVest Group joining us from San Jose. Now.